So, David, I'm going to start with you because we have the breaking money news and we heard that announcement that Dolphin Cove's parent company has filed for bankruptcy. So, give us the update. What's going on?
So I realized that there is a little lag on my side. So I'll try and go a little slow because I see the internet kind of chipping in and out. So we saw this news coming out of Mexico, first from El Heraldo de Mexico, and then Reportur, uh, two Spanish-based publications, where they pointed out that the Dolphin Discovery Group, which is the collective name referred to the group of companies associated with the Dolphin Discovery Group. Uh, there was a reference to the main intermediate holding company being declared in bankruptcy for about $200 million US worth of liabilities. Now, we have not gotten additional clarification or information to provide further context. However, the market has taken some level of concern so far. And while Dolphin Cove stock price only went down by about 5% today on a closing price basis in terms of the VWAP, the stock itself halted down and hit a new 52-week low of 15.50. And based on my own checks, the volume traded today is the highest it's been in over a year. So that's the
You're referring now to the local stock.
yeah, the local Jamaican stock for Dolphin Cove, apologies. So yeah, it's quite the development. So Dolphin Cove price tumbled down today, and it's a situation whereby you're not going to get perfect information. So, someone in a Telegram group said, they don't use AI, and AI said, they didn't say that news. And I'm saying to the person that, hey, AI is not going to pick up certain kinds of information when it is in a different language. So when I put in Concorso Mercantil into Google and I put in the co-founder's name, Eduardo Albor Villanueva, I saw multiple articles come up. And some of these articles referred to a development that, has been taking place in Florida with one of the Dolphin Discovery Group's, businesses. So Miami-Dade County, talking about the county in Florida, filed a complaint in the Miami-Dade courts, to evict one of the Dolphin Discovery Group's subsidiaries from operating at the facility in Florida. They filed a 324-page document, and this is public, by the way. You can go and check it out for yourselves. MSC Leisure is the name of the company. And what I saw in the document was quite concerning. And I'm just looking forward to see how this development plays out, because one of the things that or I should say that I learned while reading, or preparing for this discussion was that Dolphin Cove's direct parent company, World of Dolphins, which is a Barbados-based entity, has pledged Dolphin Cove shares as security for a note purchase agreement on behalf of that same intermediate holding company. So I'm looking forward to just see, more information come out of Mexico to give some clarity, and I'll see where I can do my own research to discover more information, even in spite of the language gap that I will face.
I was admiring your Spanish accent earlier. Well, David, so what's like the worst case scenario here?
So there are two scenarios from the worst case angle. One of the worst case scenario angles is that the shares that the parent company owns in Dolphin Cove, meaning the ordinary shares, are sold on the open market or to another investor or to a group of investors, which can be a good or a bad thing, because on one hand, it might result in there being more liquidity for the stock, which is a problem in the sense that when you have fewer shares available in the market, when you add more shares to the market supply, you're likely going to see a depressed price or a reduced price. The other negative, which is another extreme, is that the creditors decide to do something called asset stripping. And, not talking about the taboo thing, talking a lot more generic. So when we talk about asset stripping, we're talking about, the creditors selling certain assets, like let us say they sell the Dolphin Cove resort itself or the property by, let us say, Ochuras, for example, to a third party that would own the real estate, and they would, pay a dividend as the proceeds, or, potentially find other ways to sell assets in the business to recover capital through dividends or potentially other means to satisfy their obligations. So the intermediate holding company, we don't know how the debt is structured. So let me give some reasons why I have to explain that. If the $200 million worth of debt that is being referred to is only related to the holding company, that's a serious problem. If it's referring $200 million worth of debt across the group of companies, it's bad, not so bad. Let me explain why. If it's across a group of companies, then the debt that is held at the parent company level might be a lot less and it's easier to restructure or, sell off to another party. If it's just $200 million worth of liabilities only to the parent company or intermediate holding company, it's a major problem because that's a lot more difficult to address. And it's a little tricky because Dolphin Cove, paid out $3 million worth of dividends last year. About 2.4, 2.6 million around that range was paid out to the intermediate parent company. They pay management fees as well. So it's very fluid, and I'm looking forward to seeing what the Dolphin Cove team says in the coming days, because they would have removed they would remove the founder and the chairman at the time, Stafford Burrows, from Dolphin Cove's board in December 2024, and they have not publicly announced a new chairman as yet. So there's just a lot of uncertainty with all of these developments.
So, what should investors do now?
For me, I would just try and find information where I can and assess accordingly, because as it currently stands, you're in a space where you don't know what's happening, because most cases where creditors are trying to recover their money, they will potentially sell the debt to someone else, restructure the debt or something else, but you just don't know what's happening at the parent company level, and that's a very big problem. Because if creditors come in and start to, you know, go extreme in trying to recover value, or depending on the scale and size of the issue at the parent company level, being problematic at the subsidiary for Jamaica, it comes to that point. So right now, I would just watch and see what information is coming out, because you just cannot make a truly informed decision when you consider the fact that there's no chairman that is known to the public right now. We most of us don't speak Spanish, and if we do know some Spanish, it's not easy for us to navigate Spanish media or source information to find out more information. And the final point is, while the JSC's regulator might request the company make a statement, the company might make a PR statement, which might not relieve some of the fears that investors have. So for me right now, I'm not trading the shares. I'm just observing and trying to gather more information, because when you're in an information vacuum, while fear is a time for you to be greedy and in this case buy more shares. If the shares that the parent company owns are sold to the market, then I might end with a potential loss as the price goes down with more supply in the market. So that's just the way to explain it.
Julian, what would you do in a situation like that? Put you
Well,
on the
right
spot.
now, it depends on where you sit, because if you're on the sidelines, then that's one thing. But if you're in, if you actually hold the security, that's a different situation. So if you are an investor, it would be keen to seek audience with management to have a special AGM or a special meeting to address it, at least a press conference, because as a shareholder, you have a bit more influence on someone on the sidelines, given that it's actually your company, no matter how small the stake is. So beyond releasing information that would be generalized in a press release, it would be good if there was some more communication and dialogue with the shareholders to clarify and address certain parameters. especially in light of what David highlighted in terms of the language barrier, information vacuum, etc. But all I can say is it's not a good position to be in. It's not
Mm-hmm.
a good position to be in. You wouldn't wish that position on anyone.
Well, I hope they're watching and that they consider what you have suggested, because I do think that that's absolutely necessary at this point. We need more information, and shareholders need to have an opportunity to speak to management, to the board, and find out what exactly is going on and how does this affect my investment. Yeah. Uh, Sean wanted to know how this would affect dividends. Sean, what
Dividends are not
dividend?
guaranteed.
Oh, dividends are never guaranteed, but Lanesra says they were milking Dolphin Cove to help cover their debt. So there is that.
Well,
Disagree, David?
so to put into context, Kalila, dividends, are a reward for a company that takes a risk by another company. I wouldn't necessarily say it's a way of milking the company, but if, if one company decides to buy another company and has to finance it with debt, that debt has to be paid. Dividends, is one of the cheapest means in that case to pay on that debt. So not necessarily milking the company, because at the end of the day, when they pay those dividends out, you as a member of the public could buy the shares and benefit from those higher dividend payouts. So it's like there was an unequal situation. You still benefited as a shareholder when they paid higher dividends overall.